Vietnam's economy held firm in the second quarter. GDP grew nearly 8% as manufacturing jumped 10.7% on pre-tariff front-loading. Construction activity remained busy, and the services sector expanded 8.5% on a surge in foreign visitors. First-half growth reached 7.5%, the fastest start since 2011, while domestic reform pressed on with the provincial merger completed in under a year. Hanoi and Washington have struck a trade deal. The United States will levy 20% on Vietnamese goods and 40% on transshipment goods, and Vietnam will cut tariffs on all U.S. imports to zero. It is too early to call the deal's net benefit for Vietnam. Outcomes of other regional talks and a clear definition of transshipment goods are still pending. Even so, becoming the third country to reach such an agreement underscores Vietnam's importance in global supply chains, and further negotiations could bring upside. This deal, combined with Harvard Business School data showing transshipments are only 16% of Vietnam's U.S. exports, prompting our GDP forecast for 2025 to be unchanged. Macro signals stay healthy. June inflation held at 3.6%. The manufacturing PMI slipped to 48.9, yet should recover as policy uncertainty fades, and FDI disbursements reached $11.7 billion, up 8.1%. New FDI registrations hit $21.5 billion, up 32.6%, indicating firms are on standby to proceed once the outlook firms up. Funding for infrastructure is ample thanks to a budget surplus of $8.8 billion, and government bond issuance continues to rise. The Vietnamese dong has depreciated 2.6% year-to-date, but steady foreign investment and new regulations aimed at trimming errors and omissions should help the currency edge firmer ahead. The VN Index advanced 3.1% in June, extending its rally as investors embrace the government's fresh reform push. Resolutions that promote private sector growth and consolidate provincial administrations moved swiftly from decree to implementation, while MSCI applauded Vietnam's roadmap for English-language disclosures for all listed companies and a non-pre-funding model for foreign investors. Liquidity remained firm, with average daily turnover of $805 million, even though foreign investors recorded a modest net outflow of $74 million. Consumer staples led the gains, rising 9.9% after counterfeit crackdowns redirected demand toward established brands. Materials added 5.3%, buoyed by the steel leader Hoa Phat Group's 24% year-on-year jump in steel volume through the first 5 months. Financials gained 2.4% as Techcombank rallied ahead of its brokerage IPO. Real estate slipped 1.1% on profit-taking, and Vingroup-related stocks remained flat. Our portfolio rose 6.0% in June, compared with a 2.4% gain for the FTSE Vietnam Index. Looking ahead, Vietnam's bid for FTSE emerging market status, continuing structural reforms, and a softer US dollar should keep capital flowing into frontier and emerging markets. The earnings outlook is solid, with the top 100 stocks forecast to grow EPS by 13.5% in 2025 and trading at an appealing forward PE of 12.1 times, underpinning our constructive outlook.